Hello, trading is closed on October 4th, 2016. My last call said that Monday's action was basically positive unless we gapped under these lows. I thought there was a good chance of that happening because we had a lower target. When you have a positive formation and a lower target, typically what happens is you gap and quickly trade out of the day's range. We did, but we traded over it instead of under it. Gapping up killed the call for gapping under the low before the open. It made this number less likely to print, but it did print quite nicely. There's your support level. We had some other targets we were looking at. One was 2151.08. That's this green line. That is the low of the hole in the wall gap from right here, 2151.08. We said that would have to print at some point, and it did. We're also looking at the FOMC announcement price of 2143.85. Once we break under this with conviction, the big drop should start. We just missed it, and for the record, I don't think that's an accident. During the day, MEJT gave a sell signal here. It said it was weak and not to expect too much. That paid off. It said ultimately higher prices would print though. Here's the target. We got the minimum. Almost always we get more than the minimum. So almost always we're going to get more than 2152.87. Of course, it doesn't have to come tomorrow. We gapped up, dropped all day long, and could not close under any of these lows. That's a positive sign. It should lead to higher prices tomorrow unless we invalidate it by gapping down, taking out this low promptly. I don't think that's going to happen. Here's why. Here's a 65-minute chart. We had bar 13 of a sequential buy signal, finishing early. Of course, we could get a bar 13 for keeps, for real. But we had a pretty strong reversal when it happened. We're looking for higher prices based on that MEJT thing I showed you, and there's no reason for us to go lower than this. In addition, here's again fan line 1 by 1, 50 points in 50 days. Of course, we could undercut this, get bar 13 for real, and 51 points in 51 days, but that's not what I think will happen. I'm switching to a different count here. We had this as an AB with C completing. I'm now calling this wave 1, that A, that B, with a wave C coming up. I'll show you why in just a minute. Let's not forget this is a valid break. We traded much lower in the futures market, and those prices eventually should print in the cash market too. When all this consolidation ends, all these people who purchased stock are going to be trapped at these higher prices, and it still should lead to a big drop, although not in the time frame I thought it would earlier. Here's what I think is going on. I think I wanted to show you this too. Not only did these lows hold, this low held and that low held. So the prior lows held. That's not the way the market usually starts a big drop. Okay, so we have wave 1, newly relabeled. Here's your ABC for A. I think we've completed blue B, because here's your A, B, C for B, and here's A, B, C, D, E for C, and wave C is equal to wave A. Let's show that. It surely looks like a non-impulsive action to me. There's A, and here's the top of B, and there's C equal to A. If you want to have a little fun, there are a bunch of other Fibonacci relationships in these different waves, as I've labeled. So for all those reasons, I think B is over. Unless we invalidate it by undercutting this, we should have a good rally. Doesn't mean it has to start tomorrow. Here's your inverted diamond on stilts. This is a target of one of these legs, but often this becomes the middle of a diamond, which would imply we could consolidate Wednesday and have a stilt-like move up Thursday. It's a possible pattern, but it doesn't have to happen that way. So the call for tomorrow is this is likely to hold, and I think wave blue C up is coming. Looking out longer term, if I have this right, it's entirely possible if wave C, blue C, lasts as long as A, that it'll come to an end right about the time of the election. This could help us predict what will happen, because typically when the market rallies going into the election, the incumbent party wins. Clinton's ahead in all the polls, and she has been for months. If this works, there should be a big drop about the time of the election, and kind of implies there could be a surprise of some sort, either a Trump win or a result like 2000, where the final outcome is held in abeyance for a long time. So the call for tomorrow is that this low should hold, and if it does, we should have a rally which should last more than a day or two. It could last weeks, but it doesn't necessarily have to begin tomorrow as long as this holds. And that's today's call.